top three things in Keith's macro notebook are as follows: Japan, oil, and the U.S. 10-year yield. Starting off with Japan, the Weimer 90 dropped another 3% in the session as the yen stopped going down, albeit not meaningfully. Was up about 3% versus the U.S. dollar to 115.90. So obviously just a little bit of correlation risk there. At the same time, Bloomberg broke the headline that Japan unexpectedly fell into a recession. Not unexpected by us, but unexpected by those who thought Abenomics was going to be any different this time. Things in Japan are obviously getting panicky very quickly. Second thing in Keith's macro notebook this morning, oil down another 1.2% to 74.83 on WTI. This is despite the U.S. dollar actually being down versus the yen being up. So, oil is just kind of getting nasty, particularly when it was down to the downside, down 3.4% last week. The Bank of England's Governor Carney has come out and said this is indicative of huge deflationary pressure. Obviously we've been making this deflation call for a while, and we think this kind of, down oil is going to continue to really weigh on the liquid energy stocks and bonds, with names like Lin Energy and MLP with 5 times leverage, probably likely to get hit worse than kind of the average stock. And then the third thing in Keith's macro notebook this morning, U.S. 10-year yield. U.S. 10-year still fully in crash mode, down 24% year-to-date, falling back down to 2.29 this morning as it becomes increasingly less believable by the day that the U.S. will decouple from either growth or inflation expectations slowing globally. We continue to like being long bond. TLT is a ticker, and it's definitely at the top of our list as it relates to high conviction macro ideas. And those are the top three things in Keith's macro notebook this morning.